Okay, we are going to dip into now your pro picks. You've brought us your high conviction ideas. You're not sure about a lot of names in the mailbag, but these 3 names you've got conviction on. So let's talk about those. Pro Picks is brought to you by ATB Financial. With over $100 billion in assets, ATB Financial is powering possibilities for more than 843,000 financial services clients. ATB Cormark Capital Markets is a leading North American investment firm providing holistic corporate and capital markets advice and full-service financial solutions. Visit atb.com/inthemoney for more information. Okay, your first pro pick is On Holdings. Running shoe company. You're a sustainable investing investor. So I'm curious about the growth you see at On Holding and why it's so good from a sustainability perspective.
Yeah, I mean, I think if you look at kind of COVID and people started actually taking care of themselves a lot more, and we see that with younger generations too. So it's really that idea behind well-being and people getting out there and moving and running and walking. And it's just a company that, took advantage of Nike's missteps, taking their products out of the retail channel, for example, to getting retail shelf space. And I think that that's been their opportunity. They have a really strong brand now, but they also have really low brand awareness, which provides that opportunity for growth, I think. It's a company that, the market really hasn't assigned any sort of sustainable growth profile to from a multiple perspective, but they've been blowing away numbers and they have an opportunity too in clothing, which I don't think is really in anybody's long-term numbers. So just a company we think is really well positioned to take advantage of that wellness trend to continue to gain market share and improve their brand awareness. And then from a sustainability perspective, I won't say it's the most sustainable company out there, but they do some really cool initiatives where essentially you can do like a leasing of sneakers, for example. So you get these sneakers, you have them for 3 months, they take them back, they completely recycle them and send you a new pair. And they have a lot of recycled materials in their sneakers, for example. So some really cool initiatives that they're doing on the sustainability side of things.
Now, you have to marry that with what's going on with the consumer. You mentioned Nike. Other athletic apparel makers have also struggled. Can all of those factors exert a force against the physics, which is we're worried about the lumpiness of the consumer?
The consumer right now is a really interesting picture. I think we have kind of this K-shaped consumer, right? Where you have the high end that's actually doing really quite well. And then you have the lower end that's really struggling with things like inflation. So I think avoiding the low end on the consumer side of the spectrum is where you want to be right now. So really focusing on those high-end brands, focusing on durability with regards to brand equity, I would say is incredibly important right now. Now, we have to keep an eye on the consumer over time because obviously there's a lot of pressure, not only on the low consumer, but on the high end as well. So, but with tax cuts coming in the U.S., for example, with a still decent stock market and house prices holding up, I think the high-end consumer seems to feel okay.
Your second idea, and I think this one is a little bit controversial just because it's down and out so much. It's called Bright Horizons Family Solutions, ticker BFAM on the New York Stock Exchange. Childcare centers. It's down 30% so far in 2026. Let's first talk about the business and what's attractive to you about the business, and then we'll understand why it's been under pressure.
Yeah. So Bright Horizons has a business model where they typically partner with corporations, and then those corporations offer their employees subsidized daycare. So it's a huge benefit to the employee because you guys are in Canada, but in the US, daycare is just incredibly expensive. So
same here too.
Okay.
So one thing that isn't amazing.
Gotcha.
Yeah.
So it's really the opportunity to provide employee benefits and really retain employees, and also provides for gender equality, and that a lot of times women just don't come back to work because it's too expensive.
Of course.
So it's a high ROI for the company. And they've essentially evolved their backup care as well. So for example, you couldn't bring your child to daycare, their usual daycare, or your nanny couldn't come in. You can essentially bring it to one of those backup care centers. And that's actually a much higher growth business for them and a higher margin business for them. So that's really what the company does. They also have an educational advisory, so college planning and things like that.
And then their earnings come out, the stock plummets. They're closing a bunch of underperforming centers. So that all sounds amazing. I'm rooting for it as a working woman, for it to work and for women to have kind of that equal setup. But what were the missteps in the quarter with the company's strategy?
Yeah, no, the quarter itself was great. I think they just guided conservatively, and that spooked investors. The biggest issue for them has been their full-service daycare center. And obviously, they closed 85% of their centers during COVID. And occupancy has been ramping back up, but not to the same extent it was pre-COVID, hence the closing of their centers. So I think that as they start to close centers, as we start to see kind of that low single-digit opportunity on the occupancy as well as the pricing, that's an opportunity for them to really return to where they were pre-COVID, which was this 8 to 10% top-line grower, 50 basis point of margin improvement every year, and you had double-digit EPS, and the market like that consistency. So it's really getting back to that consistency, I think, that causes the stock to work. But the conservative guide for 26 didn't help, obviously.
But maybe an entry point if they can hit their targets. Okay, your third idea is a stock called Autoliv, ticker ALV on the New York Stock Exchange. They make safety systems, seatbelts, airbags, child restraints, things like that. What do you like about it?
Yeah, obviously there's a cycle within autos, but there's also a bit of a secular trend with this one, particularly in emerging markets. Mm-hmm. So you look at the increased regulation around safety content of vehicles. It's starting to increase in emerging markets. They're also putting safety content in 2- and 3-wheeled vehicles. So motorcycles, for example, start to have airbags, which obviously I think is an opportunity to save lives.
Is it going to help? Okay. I think I need to see a simulation of what that looks like.
I'm sure there's one online somewhere.
Yeah. Okay. But as you mentioned, there is an auto cycle, and it's customers like Stellantis, Toyota, Volkswagen. Not all of them are doing amazing. But Autoliv has held up as a stock. So how has Autoliv been able to decouple from some of the issues that maybe its customers are having?
Yeah, again, I think it's that secular trend. They're going a bit higher than the industry. So that's really been helping the stock over the years. Also, it's one of those things where there's not a lot of competition. You're not going to, if you're an auto OEM, for example, switch your safety system to something that doesn't have a brand and a proven track record. Last thing you want are your airbags failing, for example.
Is this a sector, because it's manufacturing, that is affected by tariffs at all, or?
Yeah, it certainly ties into the auto industry and the effect tariffs have had, for sure.
All right, Amber, thank you so much for joining me. It's been a pleasure chatting with you.